What's up, guys? Your driver Mike here, back with another live stream. As you may know, we typically live stream on YouTube. And if you're new to me here, check us out there at Your Driver Mike on YouTube. But for some reason, YouTube wasn't feeling the live streaming today. I tried like 10 times, guys, and I could not get YouTube to work. So we will jump back in the Twitter sphere here. We'll go back on Twitter a little bit. Nothing wrong with that. So, real quick, guys, we have a short live stream, but something big to talk about, and that's Uber and profitability. As a private company, their bottom line and their financials are not made available to us, but we can see some info from the inside, and reported today a little update for us on their financials, guys. So what happened was Uber had a conference call today with shareholders. Well, not shareholders, investors, okay? They don't have shareholders because they're not public yet, but conference call today with some investors talking about finances and kind of more of the same. Here's what happened. Uber lost almost $1 billion with a B, B as in boy, almost lost $1 billion in the last quarter of 2016, okay? Fast forward to Q1 of this year. Uber reported a loss of over $700 million, okay? So what does that mean? A, Uber is still heavily in the red as far as profitability goes, and there's reasons for that, but as they say, and the message to investors during this call was that, hey, our losses are shrinking and we are promising growth here going forward. And they're going to do that several ways. So, okay, looking at Q4 to Q1, there's a $200 million difference as far as the losses. They lost $991 million in Q4 of 2016. Q1 of 2017, they lost over $700 million, okay? Now we're in Q3. Okay, we don't see the financials for Q2 yet, but if we can go by that pattern, let's say that in Q2 of 2017, Uber lost $500 million, okay? In Q3, that means that they would have lost $300 million. So by the end of Q4 and the start of Q1 2018, Uber would be moving towards pure profitability. And how are they going to do that? Well, in this conference call, they stated that increased booking fees are a part of this. If you guys don't know, if you're a passenger or if you're a driver, check your app because you should get an update. But Uber increased booking fees really across the board here, at least in the United States and most international markets, especially Canada. But that's partly how they are going to reach profitability and close that loss margin quarter over quarter. So guys, if you're watching this on the rebroadcast on YouTube, I want to say welcome to the channel. If you're watching this live on Twitter, first time in a while we've done the live stream on Twitter, tweet at me at Your Driver Mike. Let me know what you think. What other methods can Uber do to close that loss line coming into Q4 and going into Q1 of 2018? Is raising the booking fee the only way to do it? And here in Pittsburgh, Pennsylvania, they increased the booking fee 40 cents on Uber X, and I believe even higher on Uber Select. Maybe 55, maybe 6, I think it was 60 cents on the booking fee. So if you consider, I don't know, what is that, a 30% increase or something like that? That's a pretty decent increase. And we talk about this in some of our live streams. We got a good live stream coming up this Saturday, guys, if you want to join. This Saturday, 12:30 p.m. Eastern Standard Time, every Saturday, talking about the rideshare space. I would welcome you there this coming Saturday. But A, is that the only thing that they can do to increase that loss line? And B, does this mean that Uber is going to also increase rates for drivers? Why would they? increasing rates for drivers would further Uber's profit line. They'd be making more off of each ride, obviously, and they'd be making more off of fees. Hey, we got some people joining here. Appreciate that, guys. Joining on the Twitter live stream. Really appreciate you joining here. So increasing driver rates would help Uber generate more profit. Drivers would make more. One of the points that they mentioned, that Uber mentioned in this conference call, was improving relationships with the drivers. This was reported by Bloomberg Business. This was reported by CNBC. In this conference call, Uber executives said, hey, we need to get more profitable. We're showing you guys, investors, that we are decreasing losses, and what we're going to do is focus on improving relationships with the drivers. Obviously, we know that that's in the means of the 180 days of change, okay? And if you haven't seen that, or if you haven't really looked into that, we have a video on the channel talking about 180 days of change. I have a comment here. No rights, no benefits. Well, there's an argument to that. Yes, guys, if you're driving Uber or Lyft full-time, you don't have any benefits. You don't have the health, the vision, the 401k, the paid vacation time. That's a big thing to consider. I'm glad you mentioned that. I didn't catch the name there. I apologize. But that is a big thing. And that's why I really don't advise to drive full-time. I'll tell you guys, I don't advise to drive full-time unless you're in the top 5 markets. If you're in New York City, if you're in San Francisco, if you're in those big markets for rideshare, then you may be able to drive full time. And I still say may because it's not guaranteed. If you follow the channel, we talk about how to maximize your profits. If you're in those markets, okay, doing the demand trends, knowing when it's going to surge, when it's going to prime time, minimizing your expenses, and we just talked about that in the last live stream last Saturday. That's going to help you earn more. But again, guys, as someone commented here, if you're driving full-time, consider that not only are you going to have to pay income tax on your earnings, because Uber and Lyft do not withhold income tax, you're going to have to pay for your own benefits, health, vision. Again, you don't have a 401k, you don't have a savings, you don't have a company match for your 401k, you don't have paid vacation. So if you are in one of those high earning markets, like New York City, just consider that. Consider any additional licensing you will need. New York City, again, guys, you need full commercial insurance in New York City. So all those things to consider can weigh the cost and benefits of driving full time. Maintenance, miles on a car, consider that as well, obviously. I should be able to park for you guys here in about 5 minutes. I can take a look at some of the comments coming through. But guys, if you're just joining here, welcome to the live stream here. Our channel on YouTube is dedicated to the rideshare space. If you're a driver, if you're a passenger, if you're someone that just happens to be interested in the rideshare space, consider subscribing over on YouTube, or if you're watching this on Twitter, consider following on the Twitter channel here. So to summarize, guys, Uber lost $700 million in Q1 of 2017. More comments coming in here. Predatory pricing to undercut oppression. Well, interesting about the pricing, and we talked about this last Saturday in the live stream, is when Uber initially launched, they were over $2 a mile. That's great, drivers were making good money. They initially launched as a black car service. $2 a mile was excellent. When they came here in Pittsburgh, Pennsylvania about 3 years ago, I believe it was over $2 a mile. When I started driving in October of 2015, it was $1.20 a mile. Still fair, and especially even more fair to drivers because it would surge all the time. Surge, of course, being the price multiplier based on demand, okay? Then, in January of 2016, Uber cut rates in Pittsburgh and most every market as part of their winter weather warm-up to 90 cents a mile. And guys, no one drove from Pittsburgh. I didn't drive from Pittsburgh. And we talk about this. That's a bottoming out in the low, I guess you could say, predatory pricing, like someone mentioned there. That's the bottoming out period, and we talked about that. Now, excuse me, wow. Now, we are hopefully on the upswing of earnings for drivers, and Uber's profitability, because Uber can keep rates at, 65 cents a mile, 30 cents a mile last year in Detroit, guys. 30 cents a mile, that benefits nobody. So now, hopefully, we're on the upswing for profitability. And that's why we talk about why it's so important to do the research. And hopefully, we'll see price increases as well here, because Uber really needs it, honestly. Touching again on the predatory pricing, I'm wondering, did that have to do with leasing? Okay, because there are exchange leasing options with Uber, and that's had some controversy for predatory, unfair pricing. Guys, if you're considering the exchange leasing program, I have not done it. This is my personal vehicle. This is my rideshare car right here. You can expect to pay about $150 a week, and that only really makes sense if you're a full-time driver, okay? If you're a weekend driver, if you're a part-time driver, you can do $300 a week casually, $400 depending on market. Now that is really only optimizing demand levels and doing the research. That's what we talk about here. $300 to $400 a week is not out of the scope of earnings potential. Depends how many hours you put in, of course. So consider this. If you can say, hey, I can drive casually and make $300 a week, your lease payment is $150, okay? So that cuts you down to what, $200? How many hours did you put in to get that $200 after your lease it, After you pay the lease, you have that $200. You have to pay taxes on that. So you're still not in the clear, okay? If you are a full-time driver, then you have to pay for your own health insurance, dental, vision. So you got to put more hours and make more than $300 a week to really make use and best maximize that leasing, okay? So that's why I say leasing is only good if you're driving full-time. But guys, here it is, as reported by, well, this one's Fortune, this one's CNBC, and they both cite Bloomberg as well. Uber's losing hundreds of millions every quarter, but trending towards profitability, especially in 2018. What can they do to not only help themselves, help investors, but help drivers? That's what we focus on here on the Your Driver channel here. Let me see if I can catch up on any comments before we gotta go here. And I'm not seeing it here, guys. So I appreciate you watching. If you're watching on the rebroadcast here, guys, post a comment below. We had to do a quick live stream here today, but some important news that A, while Uber is losing hundreds of millions a quarter, don't be necessarily scared away, because they're ideally trending towards profitability. B, they're trying to do that by increasing booking fees, which doesn't go to us, of course, doesn't go to drivers. And C, hopefully, in the 180 days of change, we continue to see benefits to drivers, and maybe that it means increased rates. And I missed another comment. I really apologize for that. And I really thought there was a way, guys, on Twitter for me to see those comments. Usually I would tap on the screen, and it's not showing me any comments when I tap on the screen. Technology is amazing. Sorry I missed a comment there, guys. All right, maybe you can repost that comment. I think someone commented here. You can repost that if you'd like. I'll just give you a sec here if you want to repost that question, because we do got to go here in a minute. I'm not seeing anything coming through, so if I don't see it here, I'm going to close it up. Again, guys, if you're watching the rebroadcast on YouTube or anything like that, post a comment below. Share your thoughts. When will Uber trend towards profitability? I'm thinking Q1 of 2018. And leave your comments if you think Uber is going to raise the rates as well. So that's about it, guys. I hope you have a good Wednesday. It is. Your driver Mike here. I appreciate you watching as always, and I will see you guys in the next one. Thanks.